A warm welcome to all the panelists. It's good to see you guys representing fund houses and from the investment side and from the private equity and all. So Indian real estate continues to see a lot of demand across segments. So in the first half of this year, we got 62% increase in the size of the capital, and we received some $121 million of fund. The residential segment saw a strong comeback, while office continues to be a favorite among investors, followed by warehousing. We also saw increased use of technology post-COVID. So let's start off with Gaurav. Gaurav, how have financing and investment evolved in the real estate sector in the last decade, especially if we look at from the post-COVID era?
So for, till about 2004, it used to be a domestically run industry. 2004-05 is when we opened it up to foreign direct investment. And since then, we've seen a more, institutional funding coming into this country, whether, from overseas or from India. Initially, there was equity, 2004 to 2008. There were transactions with a lot of equity being put in. Unfortunately, those transactions didn't work out too well. Then we had the global financial crisis in 2008. And from 2008 to 2011, there was, drying up of funding in the real estate space. And then moving on, it started to become more debt-like, and all structures were, mostly structured finance. They could call it all sorts of names, but effectively it was debt deals. And if you look at from a, where you're pooling capitals, over time, bank lending was always tough to real estate. So then you had foreign institutional investors and other foreign investors who would set up funds overseas. That kind of moved down to setting up local funds like AIFs here, or non-banking finance companies, which took over the idea of funding these, the real estate as such. And of course, there was clearly a lot of debt going in, and that's been the trend for the at least last 8 or 9 years. And equity really financing in real estate has not been coming, and obviously it's more expensive. And I think on the equity side, specifically on residential, there's not been much funding. But on commercial, like you correctly pointed out, warehousing and now data centers, we definitely see a lot of funding and a lot of transactions happening. Whether, post-COVID, pre-COVID, it's more or less the same sort of funding still. I've not seen really equity come back. It's still debt and debt-like deals that we see.
Sure. Thanks, Gaurav. Chan and Mridul. I would, Chan represent Ivanhoe Cambridge, and Mridul is from IFC. So let's get their perspective. I wanted to check with you on the biggest challenge that the industry faces in terms of financing. And are we moving beyond the traditional way of financing, be it banks or real estate funds?
Yeah, thanks. So, as Gaurav was mentioning, it's been fairly cookie-cutter approach, but I think what has been happening in the last couple of years, or I would say it started prior to the pandemic, is you're seeing fairly innovative structures in India, particularly about people looking at creating specific platforms, or I would say specific fund management platforms and investment platforms. The other interesting thing, which is very topical for this conference, is the use of technology now being central in most of the debates. So particularly ESG is core in all strategies. Climate finance, as it is known, is again gaining a lot of traction. And what is fairly interesting for a country like India is that the capex numbers are huge in terms of square footage, but the investment volumes may not reflect the same reality. So therefore, when you put these things together, there are now specific climate-focused outcomes which are tech-enabled. I think that's where the market is fairly getting innovative. And perhaps, Chan, to your comments, please.
Yeah, look, as my colleagues were speaking, I was wondering how to respond to this. I mean, I would say that, first of all, the first thing I say while responding to something like this is we mustn't forget that it's only about 16 or 17 years since India started receiving, institutional capital. It had no institutional context before that. So to start believing that it will start behaving like North America or Western Europe, I think is expecting a bit much. And that's why I think we've seen what we have in the last couple of vintages, where, you know, more capital than the market could absorb led to some horror stories. So that's the backdrop. I think since 2016 or thereafter, I think the story has begun to change. And I would actually correct myself and say since 2018 September, which was really India's Lehman moment, if I can call it that, post-ILFS. I think it basically showed up some very poorly capitalized enterprises who had entered real estate where the barriers to entry were virtually non-existent. And it showed, right? There was a ton of misguided credit that had gone into enterprises that had no business receiving any kind of credit. And you know, everyone knows what the outcome was. I think that's, and what that has been, what we've seen thereafter is the black swan event of COVID, where no one anticipated it. But what that has done, coupled with the regulatory changes since 2016, is it's force exited a whole bunch of unwanted elements from the industry. And it couldn't be a moment too soon. And for institutional investors like us, I think it's music to our ears. Because we have never doubted the potential of the market. It's about the execution risk. And the execution risk has thus far been because of, you know, poorly capitalized, bad ethics at play. And for the bad deeds of a few, the whole industry was being tainted. And a lot of foreign institutional investors lost their shirts between 2005 to 2009. And I would blame both the managers of those capital, of that capital, more than I would the developers. Because if someone's giving you money, why wouldn't you take it, right? But having said that, I think post-COVID, what we have observed is that India is going through a very rapid formalization of the real estate sector. And I think that's great for the future of this industry. As an institutional investor, we think that this is a watershed moment. It's not an event, it's a process. And you know, coupled with this change in the whole outlook and the landscape of the industry, I think you're going to see much more investment coming through, even if it is a trickle at the beginning, because you know, India is still an acquired taste. Let's not, you know, kid ourselves. There are many better investment destinations in the world, including in the region, that you know, take out the whole aspect of, you know, execution risk. Here, the problem is things are promised and underdelivered. I'm making a general statement. That is changing, and we believe that, you know, this forced formalization or institutionalization that's ongoing, it will show the fruits in 4 or 5 years' time. And with what is being expected of India's growth relative to global growth in the next year or 2 years, I think this is a good omen. I would leave it there.
So, Sid, I would like you to comment on, you know, right now the due diligence itself takes a lot of time for any fund closure. So we have a startup in this space called Navang. So they are basically accreditation company, and they said that they can actually reduce the timeline for due diligence. How can we reduce the due diligence timeline in the real estate space when it comes to large funding? And how do you think technology can really play a role here?
Okay, that's a tough one. All I would say is that due diligence is obviously an important part of a funding process. And I think it depends more on the pedigree of the investor than uh, and the type of investment, that how much time does the due diligence takes. Now, the involvement of technologies to reduce the timelines, um, frankly, I mean, I'm not the right person to be answering that question, because, the land due diligence, digitization of records is happening, has happened to a large extent. If that happens, that reduces your, obviously, the biggest due diligence item, which is the underlying land. In terms of financial and tax due diligence, I think, again, as the digitization of tax records happen, so that is also getting reduced. Uh, I just think obviously technology makes everything efficient and hence speedier, but I just do not know in what specific ways can it further help.
If I, if I will come in the last 2 years, we've done a number of deals, and it's all been the COVID time. I don't think we've seen the target in most cases. Everything was uploaded on, a digital platform, tax, financial, legal. And so, things are already moving in that direction. But obviously, most of the physical records, it has to be first put onto and digitize them. So if you want to quicken the process, basically you need to find some sort of technology which digitizes all these documents fast and quick and put it up onto a particular server or whatever it is. That would definitely crunch it further. But to tell you, over the last 2-3 years, things have become very efficient. And time is not, it doesn't take that much time to do diligence. It's more the negotiation.
Thank you so much, Gaurav. Mridul, I would like to ask you, how can we encourage more investment in the technology space, especially in the PropTech segment, so that, these things can be streamlined at a faster pace?
Yeah, I'm just trying to think smarter answer for the audience. I think so. It's useful to define what exactly is PropTech in the current context in India. I think 95% of the market can be defined as follows, which is it's either a device or a service that saves the cost or improves the revenues in the real estate development life cycle. Now, what does that mean? It means in the project development life cycle, when you're procuring the land, when you're designing the building, when you're constructing the thing, and when you're doing sales, this entire life cycle needs to be technology first, and then implementation second. And there are a few examples which are already there in India. Project management on an app is now a default setting, I guess, for most development companies. Gone are the days when you can go to the site and physically tabulate. I hope it's not happening, where you can physically tabulate how the construction schedules are progressing. I think all that happens on app. Most sales are done. Most sales are, now the funnels are online, particularly for residential. Most measurement, reporting, and verification protocols for climate type of funding are based on technology. They are audited by global firms like E&Y, but they are tabulated by technology interventions. There are a slew of startups outside representing, what exactly technology can do in real estate development life cycle. So there's a lot that is happening in India. I think from the perspective of the VC landscape, this is just a trickle as far as PropTech is concerned. So the amount of funding that has probably gone to PropTech startups in India is nothing compared to, let's say, one unicorn that has been, or fintech, or even agri-tech, takes in more money than PropTech in India. And most use cases, lastly, are not expected to be a success factor. So I believe there is something known as fractionalization, and we can talk about that. But there are certain use cases which are getting debated, and the results will be out, whether new models can work in that format or not. And then there are certain things which are deep tech, which is still in the university laboratories. They're still not out. And these would be related to design or features like that, so they're still not commercialized. So I think the market is growing from that perspective. The investment dollars do not show you this reality yet.
Chan, I would like your thought on, fractionalization ownership of real estate assets. So we are seeing that across warehousing. We have seen that in commercial real estate. Now the same thing is being replicated in the residential segment. Do you think is the industry ready for that, or is it just a hype that is being created? What is your thought? And
So, as I was saying to you before the session, so we have, I mean, the concept is not alien. It's happening elsewhere in the world, in developed markets. The issue in India is, for anywhere where you take public money and you're investing it on behalf of a common folk like you and me, there needs to be regulation. Otherwise, this can become another horror story. So, obviously we are all exposed to various platforms that are looking to raise capital to invest on behalf of retail investors. And my point would be that it's probably a little bit early. We need a regulatory framework. I mean, we've seen what's happened, as late as 2 weeks ago, with 5 guys sitting in a penthouse in the Bahamas and throwing away $28 billion. So I rest my case there. I think we just need to be a little careful trying to prop up, concepts that are ahead. I mean, we need to get the basics right first, consistently. So, especially where there is public money involved. Having said that, I think the intrusion of technology is a given. Blockchain as a concept is a given. We are already, the whole concept of tokenization, I mean, we're already in that world, maybe not in the real estate context, but it will happen. But, so that's one aspect. The other aspect I would say is that owning a piece of real estate is still very personal. It's, for the uninitiated, who don't understand smart finance and technology, they want to touch and feel the product. Now, so therefore, I think there will be a period of churn before it becomes a product that, investment advisors can actually put this out as an alternative to buying hard assets by itself. We have seen some examples of, in urban destinations where there are qualified managers who are raising capital using technology. Maybe 10 lakhs per retail investor, and having some kind of commingled investment platform that is technology enabled. And there are some examples, I wouldn't want to name them, but it's in the public domain, but it's very, very small. Fractionalization of real estate, I think it's probably possible in the non-resi segment more than, I don't see how it can work in the resi segment.
Sure. Thank you, Chan. Mridul, you have a view on fractionalization of real estate, and how do you think that technology can back this?
No, so two sides of the same coin. One is, it is progress in the right direction, which is you have to have more retail participation in assets which cannot be financialized that easily. One answer is do a REIT, right? That's an easy way to fractionalize the ownership, which is time-tested, regulated. The other way is to fractionalize the ownership using smart contracts. The issue there is that how do you get consensus-driven investment philosophy where, let's say, 20 people are owning an apartment using a fractional platform. I think that is something that will be testing the regulatory boundaries, but I would reserve my comments. That's one thing. There are other alternate asset classes, like, for instance, art, right? That's got a great use case for fractional ownership or tokenization, and people are doing that. People also say about wine and other alternate, really the long tail of alternate assets. that can be fractionalized. But real estate becomes quite a chunky and an illiquid asset class. And therefore, that is something that some of these startups which are in the space will tell us. But perhaps the results will be indicative of how the market is viewing them and also how the regulatory framework develops.
Thank you, Mridul. Sid, I would like your thought on, there are cases where in the PropTech segment, two builders have come together and made investment. So we have VGOT and Straw Structure. Do you think we can get in two investors together to invest in this segment?
Like two investors
Two
together?
different investors to come together and invest in, something technology-backed PropTech, where we have seen two cases of builders coming together, which is very rare. You won't see a builder coming together and making one investment, right?
I think investors have been coming together, whether it is a PropTech or a hard asset or a real estate services company. Investors can always come together, and I think that is the only way to go. And I won't bore you guys with saying that fintech has happened, health tech has happened, edtech has happened, consumer tech has happened. But if West is an example, because we always work with a 5-10 year lag with what's happening in the West. There is a PropTech fund called Fifth Wall in US, which operates like $2-3 billion under management. And I think the advent of technology within real estate is the slowest. SoftBank trying to invest a couple of $1 billion in Katera, which is like a construction company, didn't work out well. But I think it is the advent of technology in our sector is slow, but it is on the right path. I think a lot of investors are looking to invest in this sector, not only in India, and hence they will collaborate, but even in Southeast Asia, and obviously it's happening in Europe and US as well. But people, obviously, it also depends on the kind of entrepreneurs your country throws up, the kind of ideas, because investors themselves do not get those ideas, they only evaluate the ideas which are shown to them. So if there are more opportunities which are presented to the investors, then I'm sure the money flow into this sector, I think is just waiting to happen.
Sure, thank you, Sid. I think, Chan, do you have a comment
No, I
on
just wanted to complete that point. I mean, we are, in the portfolio I manage, we're co-investors with other institutions, or at least 3 or 4 funds, or actually 2 funds that are global in nature, with Indian portfolio companies in those funds. So it's already happening.
But in the PropTech technology space,
Yeah, yeah.
do we see that happening?
It's already happening. That's what I'm telling you. In Asia, in North America,
Right.
it's already happening, where you have various institutions coming together. Why just institutions? Even the JLLs and the CWs, all of them, everyone's wanting to make these seed investments into these funds to learn about what new technologies are emerging in the sector.
Right.
So it's both an investment as well as an opportunity to educate ourselves about the new trends, and that's already happening. And you'd be surprised that in the portfolio of these funds, there are a bunch of Indian companies that have taken funding as well. So there are. So the borrowers are much more underprofiled, and so, but that doesn't mean it's not happening. It's just not spoken of as much as the big office deals or residential investments.
Thank you, Chan. Gaurav, one last questions to you before we wrap up this session. That is, what is that can attract global investors to invest in the Indian PropTech technology space? And why is it that it is not happening right now? What is keeping away that money to trickle into this segment?
So, look, clearly, PropTech investments are happening. We know of, local fund managers who have set up funds. We are part of one here who are investing PropTech. The question is, I think, is the ideas, which if the technology is good, the idea is good, money will come in. And Chan has already talked about things happening in Asia and North America. In India also it's happening. It's not that it's unknown. So point is that you have to have the right idea, and I think there is money which can be put in. And clearly PropTech makes it more efficient also from a real estate perspective. A lot of the ideas that people have or doing are going to make it more efficient to construct, make it easier for customers to see stuff on the virtual reality, or even from a ESG perspective, some of the technologies or the property type of technology they're looking at helps on the environment. So there are enough things around there for money to come in. I think it's only the question of having the right idea, and it will happen.
Thank you, Gaurav. Thanks, panelists, for such a good session with you. And do we have time for one or two questions from the audience? Please identify yourself and the panelists you would like to connect.
Good afternoon, everyone. So I am Chaitanya. I work as a product consultant with some startups in construction technology space and PropTech space. And recently, I was speaking to a few of them, and they are very interested in breaking into the financial aspect of construction, right? And we all spoke about the microfinance, which is investing probably with the real estate developers and helping them finance the projects. But there are a lot of financial issues that the smaller guys also have, right? Day-to-day cash flow management. So what do you guys think, big funds like yourself, how would you guys be able to help such startups that want to get into these kind of nitty-gritty small solutions, microfinancing, I can say probably, to help these contractors, material suppliers, material vendors, and all these guys in resolving some of these problems? Because I think lending is a big game in this, right? How do you lend? What is the cost of money for you? And how do you put it out in the market to make it more viable for your particular, for the end user? So how would you guys be able to, this is a general question for all of you, whoever would like to pitch in. Thank you.
I think on a lighter note, I think EY will certainly be able to facilitate because they are the fundraiser of choice for several. But on a more serious note, I think, look, there are 4 or 5 large vehicles which look at new ideas, new ways of solving issues for the sector. There are the funds that, we guys invest in. So, I can offer to make some introductions, but you ultimately need to go to these blokes who are funding such initiatives in various countries in the region and look at new ideas. And, you'd be surprised, they're very open to looking at new concepts. So, for example, the one that you just mentioned, I think this is something that a lot of investors would very much like to get, to the nitty-gritty, to have the ability to access that data, because, without meaning any disrespect, that's where a lot of the leakage happens. And I think, so if there are solutions that address certain modules within the whole, execution ecosystem, I think there are a bunch of guys. Sid talked about Fifth Wall, there's Turanga, and similar such names that are always looking for new ideas, investment ideas, and new products to back. And so that would be my suggestion to you.
Sorry, very, very quickly, just to add to what Chad is saying, I think the government has the Open Credit Enable Network, which is looking at SME financing in a big way, and this is no different, so one can integrate this there. I think cash flow-based financing, both on the assets liability side, is a fairly standard embedded finance output. I think the real estate sector or the PropTech sector needs to kind of plug into that space, but it's a fairly solved area in fintech, if you ask me, in India.
Thank you everybody for joining me.
There's one more.
So we'll just take this last one.
Please don't hate me, I'm not holding you up from your lunch. This is Rahul from Deloitte. So if you see the whole of investments that's happening or that has happened till date in real estate sector has been more or less a debt in investments, right? And PropTech is coming up now, and we are all trying to understand as to how PropTech can get the growth, and it has to be an equity-based growth where the returns to the investors come over a long period of time. There's that much of money that the companies have to grow and reinvest into itself than to pay it back to their investor, which typically happens in the debt kind of a fund. So, given that the real estate sector, which typically has worked on debt funds, has to now adopt products of prop tech, which is going to be an equity-based investment target for for all of us that we're looking for out as to how can they raise that kind of money. Do you think there's adaptability or there's adoption in the real estate sector to pay up that kind of bills to the prop tech companies? Because if you look at the history of funding in India, financial services was the first sector which actually took up the technologies to the best of its utilization, where biggies like Infosys, Wipro and TCS all made products which are financial services oriented because they found it imperative for themselves to have those products to solve the problems that they were not able to solve manually. That's when the technology got adopted very easily. Do you see willingness in the real estate sector to take solutions from the prop tech companies and spend that kind of budget? Are you seeing that in the market? And this is a general question. This thought came up to my mind when I was just hearing the previous question and also the discussion that was going on. Just thought of just bouncing this off. Thanks.
Sorry, I'll just take this quickly. First of all, it will be nice if EY can answer a Deloitte question, right? But how to say this in half a minute is the difference between private equity and VC in prop tech can be understood by how does one side understand the term called, let's say, LTV, right? For the PE world, that's loan to value. For the technology world, that's lifetime value of a customer. So this translation is where all of this gets lost, right? And most of the opportunities are actually in between these silos. They're not really VC pure, and obviously they're not private equity type of investing. And the often discussed thing in technology investing for prop techs in India is that, these are negative EBITDA companies. So the PE world, the traditional real estate PE world is not really accustomed to these investment. And the last thing is, the real estate PE world is accustomed to large check sizes, right? The nature of the business is large capex numbers. So this is counterintuitive to technology investing. But when you come to look at technology investing, it is about contribution margins in those technology startups. Where is the adoption rate when you attach it to a real estate construct? That is where this is getting more and more interesting. And some of the work is incubators and accelerators are doing this phenomenally well in India. And if you see the scaling up of accelerators and incubators, it's reflective of how this translation is happening. And lastly, I think the scale at which now capital is investing in prop tech startups, the deal sizes have increased, right? So you often hear $50 to $100 million rounds being invested in Indian prop tech. So I think it's all pointing in the right direction. And EY answering Deloitte, probably you can hear it over lunch, right? Yeah.
Sure. Thank you everybody for joining on the panel.